Hello and welcome back to Bitcoin Dorks, your daily source for news and updates on cryptocurrency markets. Today, we'll be discussing the recent dip in the prices of Bitcoin and Ethereum and what may have caused it. We'll also talk about the impact of higher bond yields and the strengthening US dollar on the cryptocurrency market. So, without further ado, let's get started. The bull breather. Bitcoin and Ethereum have been on a bull run for quite some time now, but as we know, every bull run has its corrections. Over the weekend, both Bitcoin and Ethereum saw a slight dip in their prices. Bitcoin fell from around $63,000 to around $59,000, while Ethereum dropped from around $2,400 to around $2,100. Now, before we get into why this happened, it's important to note that these dips are not unusual. In fact, they're a common occurrence in the cryptocurrency market. This bull run has been exciting for investors and enthusiasts alike, but it's important to remember that these markets are inherently volatile. The recent dip in prices for Bitcoin and Ethereum is a reminder of this reality. There are several factors that may have contributed to this correction. One possible reason is profit-taking by investors who have seen significant gains from the recent bull run. Another possible factor is the increased scrutiny of cryptocurrencies by regulators around the world. This has led to concerns about potential regulation and restrictions on the use and trading of cryptocurrencies, which can impact their value. It's important to note that these dips are not necessarily a bad thing. Well, they can be healthy for the market as a whole, allowing for corrections and adjustments that can prevent an eventual bubble burst. It's important for investors and enthusiasts to remain patient and keep a long-term perspective rather than getting caught up in short-term fluctuations. Now, let's move on to the impact of higher bond yields. One of the reasons behind the recent dip in cryptocurrency prices is the rise in bond yields. Bond yields are an important indicator of the health of the economy, and when they rise, they can have a significant impact on investor sentiment and behavior. The rise in bond yields is largely driven by the expectation of higher inflation and economic growth. As the global economy continues to recover from the impact of the COVID-19 pandemic, investors are becoming more optimistic about the future, and this is reflected in their investment decisions. As investors shift their focus towards safer investments like bonds, the demand for cryptocurrencies decreases, leading to a drop in their prices. It's worth noting that this is not the first time that the cryptocurrency market has been affected by rising bond yields. Also, this is a common occurrence in the market, and it's something that investors have come to expect. As a result, the long-term impact of rising bond yields on the cryptocurrency market is still uncertain. While it's clear that higher bond yields can lead to a decrease in demand for cryptocurrencies, it's possible that the market will recover once the economy stabilizes and investors feel more confident in the long-term prospects of cryptocurrencies. Next is the strengthening of the US dollar. Another factor that may have contributed to the recent dip in cryptocurrency prices is the strengthening of the US dollar. The US dollar is the world's reserve currency, which means that it's used in most international transactions. In recent weeks, the US dollar has been on an upward trajectory due to several factors. First, there's been an expectation of higher interest rates in the United States, which makes the dollar more attractive to investors looking for safe and stable investments. Second, there's been growing optimism about the US economy's recovery from the COVID-19 pandemic, which has further boosted the dollar's value. As the US dollar strengthens, it becomes more expensive for investors to purchase cryptocurrencies, which are priced in US dollars on most exchanges. This means that investors may choose to sell off their cryptocurrencies and invest in the US dollar instead, leading to a dip in cryptocurrency prices. The impact of the strengthening US dollar on the cryptocurrency market is a reminder of the interconnectedness of global financial markets and the need for investors to monitor a variety of factors when making investment decisions. As such, many investors may choose to hold on to their cryptocurrencies despite the dip in prices in the hope that they will continue to increase in value over the long term. Moving forward, let's talk about the steady DeFi market dominance. Despite the recent dip in cryptocurrency prices, the decentralized finance, DeFi, market has remained steady. DeFi refers to a set of financial applications built on top of blockchain technology, which allows for decentralized and trustless financial transactions. DeFi has been growing rapidly over the past year, with the total value locked in DeFi protocols reaching over $100 billion. Despite the recent dip in cryptocurrency prices, the DeFi market has remained steady, which is a good sign for the long-term health of the cryptocurrency market. This indicates that investors are still interested in the potential of blockchain technology and are willing to invest in DeFi despite the recent dip in cryptocurrency prices. In conclusion, while the recent dip in cryptocurrency prices may be concerning for short-term investors, it's important to remember that the cryptocurrency market is highly volatile and prone to sudden fluctuations in price. The rise in bond yields and the strengthening of the US dollar may continue to impact cryptocurrency prices in the short term, but the steady growth of the DeFi market is a positive sign for the long-term health of the cryptocurrency market. As always, it's important to do your own research and invest wisely in the cryptocurrency market. That's all for today's video. We hope you found this information useful. If you did, please give this video a thumbs up and subscribe to our channel for more updates on cryptocurrency markets.